Craig Bolanos. He's a wealth partner and advisor, co-founder and wealth partner at VestGen Wealth Advisors up in Chicago. Craig, thanks for coming on. I don't have it yet here. My little machine hasn't updated, but what do we got for CPI?
We got a 0.9% increase month over month. CPI X the volatility of food and energy came in better than expected, up 0.2 month over month versus the 3, and the big overall headline number 3.3 versus the 3.3 that was estimated. Now, if you were to ask anybody, was the print going to start with a 3? Of course it was, because it feels a little bit hotter to everybody. The worries of stagflation have been running rampant for years. Is this finally the year 2026 where the teeth of stagflation kick in? I say no. It's not nearly as bad as anybody thinks.
Well, we just saw basically oil go from 65 to 105, and this is what we've gotten out of it. So I think you're right. And if we see a softening of oil, which we will. Now, that's another thing that we can talk about for 2 seconds also. The president, more than anybody else on this planet, knows that if he's going to have any success in the midterms at all whatsoever, he's got to get that Straits of Hormuz opened up. So he's either going to open it up, or the 30 countries that he's trying to wrangle together to open it up are going to open it up. It's going to be open. That's a given. Now, it only is a matter of time, and that's the thing that we're all trading here. How long it takes, right? Because the longer it takes, the more damage it does. That's it. But it will be open at some point in time, and when that happens, we're going to see these prices get back to some sort of normalization. Now, it's worth talking about that when Russia invaded Ukraine, we had something similar happen with the oil prices. And it took about 6 months for them to normalize. So we need to have this happen sooner rather than later to see those prices get back to where they were. And then, Phil Flynn, he's an oil expert. We've had Carly Garner on this network as well. They both think that there's a great chance that we go a lot lower than we were before the conflict started. So to your point, that's not going to be inflationary at all whatsoever. Throw in a little AI and the productivity that we're already benefiting from, Craig. And it looks like, I think it's going to be hard for inflation to really, we're going to hear a lot of stories about it today. Don't get me wrong. I mean, it's going to be headline numbers, believe me. But I think that over the next 8 months, it's going to be hard for it to raise its ugly head.
I think so too. And I know everyone discounts core because core strips out the volatility of food and energy. But again, the core rate was 2.6 versus 2.7. So where's your reality? Your reality is an inflation rate somewhere between 2.6 and 3.3. And I'll tell everybody that as a financial planner, as a wealth manager, does anybody actually make long-term retirement plans based on the Fed's target of 2%? No, I don't know anybody who's credible who has ever done analysis and work in that way. A good financial planner goes ahead and does run rates of healthcare over 5, because that's what it is. They do simulations with higher inflation. So I think if people are investing with purpose, which is tied to their retirement plan, they're going to be in great shape. And just as you said, I'm happy you confirm what I think. I'm not too worried about 1970 style inflation coming back anytime soon, but I am still a little bit nervous that these massive productivity gains, which are going to drive earnings per share, courtesy of AI, are going to hamper the other side of that Fed dual mandate, which is maximizing employment. And I do see us printing a 5% headline unemployment in the months to come as AI further adopts.
I agree with you, and then that's the risk, because they only know how to cut rates when they see that happening, and cutting rates is not going to help stem the tide of that unemployment wave, because it's artificial intelligence. It's something totally new. It's not a slowdown in the economy, and actually, we're going to have a job loss recovery in the economy. I think that's what it'll end up being. I have another thing I want to run by you real quick before you go. Interesting talk we had yesterday on the Cow Guy Close, 12:30 Central, 1:30 Eastern. Cheap plug there for you. But over, we've got 11 states in the southeast of the country, Florida being one of them, Tennessee being one. I won't go through the names, but the last 5 years, they've been a beneficiary of 70% of the population growth in the country. 70%. And now the GDP of the combined 11 that I'm talking about, basically from Texas to South Carolina and then south, the GDP is $9 trillion, which is only now beaten by the U.S. and China. Do you talk to a lot of your retirees or about to? Are they all moving south? I mean, is that something that's happening a lot?
I got news for people. There's incredible magnetism all throughout the Southeast because who doesn't enjoy SEC football? Although I'm a Midwest guy, Big Ten. But my comment is taxes in retirement, TIR, taxes in retirement really can and really does matter. And you're starting to see evidence of that around the country. All these people leaving the Midwest. I can't believe I'm going to do a shout out to people in Michigan, but look at what Michigan did. They went ahead and got on an evolution to make sure that they were going to stop taxing retirement income to actually have a cessation in the tide of people leaving. The only thing that keeps people in Illinois, besides family centricity, is the fact that we don't tax Social Security, retirement income, etc. But at some point in time, Scott, could you imagine if Miami actually got their act together and attracted all of the Wall Street capital out of New York? Holy cow, you'd be able to generate free property taxes in Florida, and then everybody would move. Please don't. I've got spots in Florida. I like my little island. But I think TIR, taxes in retirement, are an important consideration for everybody. And if you're listening because you're a business owner, you're a farmer, you're an entrepreneur, and you have to worry about estate planning, that's a whole other level of taxation that people need to pay attention to in the latter stages of their life.
Right, exactly. Inheritance tax being one of them, and the mom Dami in New York wanting to jack it up from 15% to 50%, which is absolute highway robbery, taxing money that's already been taxed. So yeah, you make some great points there, and I just wanted to highlight that because I think it's only just beginning, Craig. I really do. I mean, it's something I felt strongly about back in 2005. That's why I bought a house in Scottsdale, Arizona, because I felt like there was going to be a wave of baby boomers that were going to be slowly but surely retiring to the South. I was a little early. I had to suffer through the great financial crisis of 08, 09 and watch everything I bought go to basically zero. But it's now back and doing what I thought it was going to do. And to that point, we're talking about some big-time population growth in those areas. And again, we've seen Ken Griffin leave with Citadel out of Chicago. We've seen Boeing leave Chicago. I just did a story about the McDonald's CEO having trouble recruiting to Chicago. He's wondering whether they should stay there. And they've been a mainstay in Chicago for decades. I don't know how long it's been, but when you say McDonald's in headquarters, you know it's Chicago. So you've got these northern states that need to really get their act together, and they got to stop spending regular people's money on sanctuary city, illegal immigration, housing, food, subsidies, whatever it is you want to call it. But that's the problem. They're spending a lot of money on visitors and not spending it on the people that actually they raise the taxes from, right?
No, that's exactly right. I wish every great city the best because I want everyone to be successful so that people can choose where they want to live. Because again, I think family really matters. All forms of lifestyle matter, but there's no doubt that more and more baby boomers, as everyone becomes more and more educated, pay attention to TIR, taxes in retirement, and that does drive decision. It's not just sunshine, it's income taxes. So to all the states out there, it's a great balancing act. You're in competition. Make sure you balance the budgets if you too want to keep the U-Hauls from being one direction.
All right, brother. Great to have you.